The third step's a trial balance once we've balanced all our ledgers. So we've got cash at bank, which is a debit balance. We never assume though, we always wanted to make sure that whether it actually can go into overdraft, but in this case we've got money in the bank, so that's going to be a debit. We'll do debtors, which are a debit. We've got shop fittings, which are an asset, so they're debits. We've got capital, which is a credit. Stock, a lot of transactions there, but we ended up with a debit balance of $23,990. Creditors are a liability, so they have a credit balance. We have a loan, same as creditors, will always be a liability. Wages are an expense, so that'll be a debit. We balanced out GST. We never wanted to assume, we just make sure that it is actually a liability in this case. It could be an asset, but because it is a liability, it had a credit balance, so that'll go on the credit side of the trial balance. Got insurance, which is an expense. Had all those sales were revenues. Revenues go up on the credit side. We had a computer asset, which is a debit balance. Cost of sales are an expense, so that's a debit balance. And then we had drawings, which was a negative owner's equity, so it has its own rule. It's just going to be the opposite of capital, so that'll be a debit balance. And then we've got advertising expense, and then we've got stationery, which is an expense, and therefore had a debit balance. So what we'll do now is just go and add up all of our debits, try and check that this thing does actually balance. So in this case, if we add up all those numbers, we get 65253. But then we better go and add up all of our credits. We're hoping that we've entered all our debits with matching credits, and if we add up those numbers, we get 65253.